We used to measure military strength in troop counts and firepower. Today, a nation's ability to wage war is strictly limited by the tolerance of its global supply chains. Strategists call this the economic clock of war. Right now, two critical resources are winding that clock tight. The first is the supply of advanced semiconductors from East Asia, and the second is the flow of crude oil out of the Middle East. For decades, global peace has relied heavily on Taiwan's silicon shield. This is the geopolitical theory that because the island produces over 90% of the world's most advanced and critical microchips, any invasion would trigger a global economic collapse, deterring attacks. But that protective layer is thinning. As production shifts and supply chains fracture, the calculus of superpower conflict changes, and everything from smartphones to fighter jets becomes significantly more expensive. In early 2026, the United States and Taiwan finalized a $250 billion trade agreement. The core objective was to build massive new fabrication plants for TSMC, the world's leading chipmaker, right on American soil. Taipei calls this strategy managed diffusion. By distributing its manufacturing capacity to trusted allies, Taiwan removes the risk of keeping the world's high-end chip production concentrated on one vulnerable island. Yet this strategy carries a severe hidden risk. As Taiwan exports its chip-making expertise to the West, the island becomes less indispensable globally. If the United States and its allies secure their own domestic supply of advanced chips, Beijing knows the West will be less desperate to defend Taipei. The economic fallout of an attack drops significantly. By attempting to insulate its own technology supply chain, Washington inadvertently sprung the Taiwan trap, weakening the primary deterrent that has kept peace in the Pacific for decades. While the Pacific simmers, the spark for the current crisis ignited in the Middle East. In early 2026, coordinated military strikes from the US and Israel targeted Iranian infrastructure and leadership. This was a calculated macro strategy. By dismantling Tehran's proxy network, the United States aimed to eliminate strategic distractions, freeing up American aircraft carriers and naval fleets to pivot toward the South China Sea. Iran responded with a devastating asymmetric countermove. Tehran completely closed the Strait of Hormuz to any vessels associated with enemy regimes. The blockade had an immediate global impact. By shutting down this symbol waterway, Iran leveraged geography to trigger systemic economic failure across 3 continents. This visualization shows the immediate fallout. In an instant, 21 million barrels of oil and 20% of the world's liquefied natural gas, or LNG, a fuel crucial for heating and electricity, vanished from the global supply chain. The market reaction was violent. Brent crude prices crossed the $120 per barrel threshold within hours, driving inflationary spikes across Western economies, while global equity indices crashed. Then, Tehran introduced the petro-yuan ultimatum. Iran declared that tankers could only navigate safely through the blockade if the oil they carried was traded in Chinese yuan. This policy targets the dominance of the petrodollar. By forcing energy transactions into yuan, the blockade accelerates China's strategy to internationalize its currency and bypass Western financial sanctions. The Hormuz crisis forced the global economic clock to tick at high speed. Western economies are now on a countdown to systemic failure, driven by energy starvation and inflation, long before any military arsenals run dry. By late March 2026, this economic clock forced a showdown. At the APEC summit in Busan, South Korea, Presidents Donald Trump and Xi Jinping arrived at the negotiating table under immense pressure. This was an exercise in weaponized interdependence. Both nations arrived wielding their integration in the global economy as a tool to extract concessions from the other. Beijing held a massive physical advantage. China controls the export of critical rare earth minerals, elements like tungsten and gallium that are required to manufacture U.S. defense equipment and advanced computing hardware. Washington held the financial and technological high ground. The U.S. maintained sweeping tariffs and tight semiconductor export controls that were actively slowing China's domestic economic growth and artificial intelligence development. The resulting pause in hostilities is a truce of necessity. It is a mutual admission that neither superpower can survive the total economic starvation that a continued escalation would guarantee. The silicon shield has evolved into a highly unstable, weaponized web of global trade. In the 21st century, national power is defined by the structural resilience of a nation's internal systems. Ultimate supremacy belongs to the nation with the structural resilience to endure severe supply chain dislocation longer than its adversary. The global economic clock is still ticking. Conflict is now measured by the depletion of energy reserves and the collapse of grocery supply chains. The next choke point is already forming. To stay ahead of these shifting battle lines, join our premium community. Hit the link in the description to subscribe to our newsletter for real-time intelligence on the technology and resource wars defining our future.